All right, let me share my screen. Share screen. Okay. All right.
Here's Tushar.
So there you got him. Good.
Yeah, I just let him in.
All right, good. All right. So the lower portion here is lower left. Hopefully people can see that now. If you can't see it, let me or Jennifer or Jean know in the chat box, and we'll see if we can't figure out a way to fix it if there's anything that is fixable.
I'm going to turn off my video now.
All right, and then just continue to let the other people come on in then.
I shall.
Okay, great. All right, so what we typically try to do is say, okay, what was working? People could see my screen now, right?
Yes.
Okay. So I've got a quick agenda here. We'll do a review of the previous trade recommendations, in particular Larry Williams trade, the Amazon, Costco, and I have a poll here. Let's see if I can do a poll while we're doing this here. I'm going to launch a poll, and I'm just curious. So we talked about these two trades at the last meeting, the Costco and Amazon trade, and we also we have it in our calendar. So you should see a calendar here. Here was a Costco trade. There was the entry, and then you exit 7 days later, and then here's the Amazon trade. You entered on the 6th, exited on the 9th. So the question is, how many people actually took that trade, first of all? So let me move this off. And so I will launch this poll. And if you could do me a favor and just fill in this poll. Could you see that poll there? So one is, did you take the trade? And first one is, did you take the Costco trade? And then the following one is, did you take the Amazon trade? And I see nobody voting yet.
Hey, Ken.
Yeah.
This is Kirk.
Kirk. Yeah, Kirk.
Yeah, I can't submit the poll. It's not active.
Yeah.
It's not active.
Yeah.
Yeah, because if I didn't take the trade, then I still have to choose the other option, number 3 and 4, which I don't have to, so I can't submit.
So, but it should say, did you take the trade? It should be no, should be the first answer. And then
no.
Well, it seems to be adding them up.
Yeah, you have to answer the other two, but no doesn't apply to the other two.
Correct. So you should just be able to say either no, or you bought the stock, or you bought the option, or you did a vertical, or you did a put, or you sold a vertical.
There needs to be a not applicable for the second two questions.
Right. That's why we can't submit.
Yeah, we weren't allowed to submit.
Huh? Could Bob Yal, could you just take a snapshot of that and send it to me in the chat?
Sure.
I want to see what that looks like. From my end, it looks pretty good, and I'm actually getting responses, and 75% of the responses are saying no, they didn't take the trade.
Oh, Ken, the problem is that for people who didn't take the trade, you can't answer questions 3 and 4. There isn't a correct option. So
just answer lost money and be done with it.
Right. That's what I'm going to suggest. Is I just use the less than 10%, just because, well, I didn't lose money and I didn't make money, and it was, well, less than 10%. That's the
oh wait
most correct non-answer.
So there's four different questions here, right? And so you should be able to scroll up and down on it.
Yeah, that's not the problem.
Yeah, that's not a
Okay,
problem.
look at number 3.
Yeah.
Okay, so as somebody who didn't take these trades, I can't answer none of these apply to me.
I see. Bad
And that's
pull.
what everybody says. I just,
I'll have to
yeah,
talk to the
it just
poll
needed
decider.
one more box, like NA.
Yeah. All right.
That's all.
Got it. Okay. All right. Well, that's interesting. So looking at the poll though, the people that did answer, so people got less than 10%. I see 50% of the people got less than 10%. 19% got 10 to 50%, 50%. And then 6%, one person got over 100%. Okay, on both of them. So,
Wow.
so could the person that said they got over 100% own up to it and explain?
Yeah. That's amazing.
Ken, your
lied.
percentages will be off because people had to lie to answer it.
Yeah, exactly. I lied as a greater than 100% because
So-
I mean, that's it.
So Tushar, you lied and you said it was 100%?
Yeah, in both the cases because I didn't take those trades. Yeah,
I see. All right.
so that
Well-
was me. Yeah.
Okay. All right. So I will share the results here.
Ken,
Yeah.
the results are as good as paper trading.
No, it's worse actually. With paper trading, you won't lie that much.
So
It's a little cynical.
what I found most interesting though is that the first part is that most people, 75% of the people, 80% of the people did not take the trade. 80 to 90% of the people. So that was the most interesting part to me. And I don't know what else we could do, or if I guess we need to have discussion at the end as to why people didn't take the trade. But
Hey, Ken,
Yeah.
I think I didn't know about it, so I certainly would have taken a look at it. So, maybe some people didn't know about it. That may have been the reason.
so what we did is we had talked about it at the previous meeting. I
Uh-huh.
showed people on the calendar
Mhm.
that here is where the trade was.
Yeah.
And so, I mean, I don't know what else can be done.
Well, I missed the meeting. I missed the last meeting, so.
There was also a video, and I sent out an update of the video of the meeting. So if you didn't like to listen to the blow by blow, you could have gone up to 50%, 20, 50%, or 100% faster. So you could have really whipped through the video really, really quickly. So
Yeah, but it would have been nice that if we knew there were some trades in there. That's different than what we normally do. That's all I'm saying.
say it again.
So I couldn't attend the meeting and I didn't know what it was. I had a very busy week that week, so I didn't watch the meeting. But had I known there were some trades, I would have taken a closer look at it. And I wondered if other people, because it's different than what we normally do, right?
I don't know. I look at the calendar regularly. So I look at the excess profits calendar to actually see if there are any coming up trades that have high probability trades, right? These things are 100% probability. Now, if you want a thing posted to your email, the only thing you need to do is click on this, copy this to your calendar. See this on the bottom? Copy the calendar. And it will tell you, hey, Jack, wake up. This is the big trade. Take it.
Right. I didn't know we had trades on the calendar.
Absolutely.
I certainly will be looking at it more carefully.
We've had this. We've been talking about it for about 2 or 3 years now. 4 years maybe.
Okay. All
right. Okay. So that's on the calendar. So let me just show you some of. Tushar said he got 100%. I actually took the trade and I got 130%. So if these are verticals. So what I did with Amazon, I didn't want to put out a tremendous amount of risk. So if you buy an Amazon call on there, it was going to be like $6,000, right?
Yeah.
And I really didn't want to do that. So that was a trade was based on something that Kramer said. I actually entered the trade back here. I actually got a buy signal on my stochastic way back here, and I did a vertical. Instead of buying 3,200 strike call on Amazon or a 3,205 strike call on Amazon, I ended up buying a vertical. So it cost me much less than that. I think it cost me $2 or $3. And so I ended up making 160%. So here is the actual trade. Here is the price of the vertical, and it's just hanging all over the place. And that's because of the sparse information, sparse data for the price action of the 3205 strike call on Amazon. So I got 100, I think it was about 150%. I didn't get 164, I actually got 150% on that. If you would have actually taken the real trade with a vertical or with just an individual call, you would have had this is the actual call on Amazon. So it would cost you $6,000, $7,000 to enter the trade, and you would have been up to 18,000 at the end. So you would have made 160% on that trade. So it was Larry Williams, bless his heart. The trade is consistently, it's 100% even to this year. So it's nice to be able to make 100% in 3 days. So yeah, and then the and then the Costco trade was the same kind of thing. I basically did the Costco trade just a little bit before Larry Williams Kramer did it, and I ended up with about 120% on that one. So it's nice to be able to have a 3 or 4 day trade. If you go to the calendar, I had on the next month, on May, there is a Tesla seasonal trade. This is per Ken Hoder, not the Larry Williams or the Jack. Jack?
Yeah, what about it?
No. The previous guy, who was the guy that we had, the professional trader that we had that you brought in, Jack?
Jack
Bernstein.
Bernstein, yeah. So Jake Bernstein has these also seasonal trades. He's following in Larry's footsteps too, and he's got some sort of a search engine that actually allows you to find them. So what I did is I tried to code up some stuff to try to find out seasonal trades, and I've been watching Tesla for a while. So if you click on this is a seasonal trade on Tesla, and it comes up and it tells you this is a seasonal trade. You start on I think it's 5/22. That's the date that you start the trade, and you end up on 7/22, 2 months. It's not like these other guys. These other guys are like in and out, 2 days to 7 days. That's what I would prefer. But this is a pretty high probability trade on Tesla, and I did a seasonal analysis on it, and here is what it looks like. If you go to that calendar, click down through it, look at the details, you'll actually see the file, the spreadsheet that I came up with. So you could actually click on that spreadsheet and sort it so that you could say, well, I don't care if it's 90%, I just want a shorter time frame, and you can adjust the time frame on the spreadsheet. But this looks like this is the seasonal trade. Here is the performance report here on it. Yeah, this last trade was really a humongous trade, but typically it's upward to the right, and you're basically having 100% probability of success on that. I like those kind of trades. So just to let you know, another trade coming up. It's a seasonal per me versus Larry and Jake. So take it for what it's worth. Will it happen again? Who knows? But might as well bet on the probabilities. So, okay, let me see. I had another poll I thought here. You guys see the poll results still obscuring your screen or not?
Yeah, the poll results are still on the screen.
Okay, I'll take that off. All right, sorry about that. So were you able to see that that other stuff or not while I was showing it on my screen?
Yeah, we can see your charts now.
Okay. All right. Still getting the hang of it. Somebody asked, what's the delta? I usually shoot for a delta of 30 or less on the options. So that seems to be holding true even to this day. I can show you another one which is spectacular here, and that is this is SPY, and just buying a call on SPY when the stochastic actually hit back here in March 26th. If you would have bought a call there, these are two different call strikes. This is the 395 and this is the 412. The 412 went up 2,400% till now. And the 395 went up 495%. And you can see there's a indicator that I have here, which is the delta, and the delta on the 395 was 35. So it keeps on working pretty well. When you're in a nice trending market, this is a nice way to really leverage your capital. So, all right. Steve Alexander, do you want to mention any of your stuff in your trading that you're doing?
I can just show where it is right now. I think I have 6 positions. I can share that quickly. There's nothing really to talk about. Everybody knows.
Okay.
Oh, Steve, I heard that you were killing it on Ethereum. You want to talk a little bit about that?
No, I don't trade Ethereum at all.
Oh, okay.
Where did you hear that?
I can't remember. Somebody had mentioned I was talking in a group. I might have misheard. It could have been somebody else.
Okay. Here, I'll share my screen and just briefly show you what's going on here, or what I'm doing. This is my current spreadsheet, and I have, as you see there, 4 things. I'm in Ford, ICLN, NAO, and TNA, and this is that's when I bought them, and there's no sell date because I'm still in all of them. Bottom line, since June of 2020, trading no more than 30,000 per position. I'm up 45,000, so it's 148%. Annually, that would equate to about 178%. So I'm kind of happy with that. The way it goes along is it just goes by the strategy. The only other thing I would say is that I have a new strategy that I am not trading yet, but it looks awfully good, so that's why I'm thinking about trading it. It trades based on volume only. Doesn't even consider the price of the stock. It only considers volume, and it looks pretty good, especially on TNA. So that's about all I have. Any questions?
So, yeah, on the volume one, if you're not trading the volume, you don't know if the volume is going into it or out of it. How do you determine without looking at price?
I will show you. Okay, I'm bringing up TradeStation right now. That's what the screen looks like. So I'm not considering volume going in or going out. I'm just considering the daily volume. And what the strategy does is it takes the average daily volume for the past X number of days. Currently, I think I have it set to 5 days. So it takes the average volume, and then it calculates the slope of that volume. In other words, is the volume going up or is the volume going down? And that's all it's concerned with as far as the strategy goes. Here's an example. This is TNA, the small cap triple. And these are the trades that it's taken during the past approximately a year. The cyan blue trades are all winners. And the yellow, there's one right there, that's loser. And here is the performance report. If you had done this for the past year, so this is from April 17th last year until now, if you had done this, you would have made $397,000. You'd have made 22 trades, and 81% of them are profitable or were profitable. So it looks kind of like maybe worth doing. I don't know. I haven't decided. These are not live trades. This is a simulation. It's a back test.
Hey, Steve, the profit factor of 31 is just incredible. It's unheard of.
Yeah, I know.
It's probably one of the highest I've ever seen. But on the other hand, you've only been trading it on an up market. If you change your dates and let's say go back 20 years, how would the system perform then?
I don't know, and I don't care. I don't look at anything beyond maybe a couple of years ago. Whatever the market was doing in 1932 or 1995, I do not care. It has nothing to do with today, in my opinion. And that's just my opinion. Maybe I'm wrong. Maybe it's important to look at what happened a long time ago. But I don't.
Well,
I never go back that far.
Well, if you go back to, let's say, beginning of 2020, where you look at, how did the system perform on a big down move? So you're only looking at when the market was going up. Of course, you're going to make money.
Okay.
Just a thought as another system developer.
So anyway, that's what I've been doing, and that's the results so far. So that's about it.
Very good. Very good, Steve.
Okay, and I'll shut this down and stop sharing, and we're good.
All right. All right. And since we're talking a little bit about development, we'll get to you just shortly here, Tushar. I can share my screen real quick here and show you a little bit about what I have been developing. So I have this thing called the Holy Grail. And the Holy Grail is designed to blow the socks off that profit factor of 31. Pshaw.
Oh, wow.
Mine never loses money. So here is the strategy. It basically looks for pullbacks and takes profit on the upswing. It uses a Larry Williams circle bar and circle bar percent R. This is a little facetious. This is just to goad people on a little bit. But at the same time, this is what I've been using for the last 2 or 3 weeks.
Oh, Ken, you're not sharing your. Are you sharing your screen, Ken?
Oh, yes, I am. It's not coming through, huh? Let's try it again here. Okay. So how's that? A little better?
Yes, got it now.
Okay. The upper left is the strategy. This is the daily bars. This is daily bars here. This is overnight. This is weekly bars, but this is the one we want to look at here, this particular one in the upper left corner. And so you can go down and I could just click on these various stocks. And what you can see is that this is the P&L So this is a stock that's basically going sideways. This is Agilent. It basically goes sideways, and this thing just keeps on making money. If you can look at back however many years you want to go, it's the profit factor is always I'll show you. Profit factor is indistinct is ridiculous because, well, not ridiculous. It's basically NA. There's no, it's 100%. So you always, well, this didn't have 100%. It's actually had 93.75%. There's a little bitty thing that happens when you do a quick trade. So there's a couple of anomalies, but typically you get 100% trades on these things. There's a little tiny one here that's a negative. But you can go down, just click on down through these things. You can have Alcoa aluminum, and you'll see that this thing here, over the period of a day, yeah, it, you know, $204. Apple, and this one here, even though the price went down over the day, you made money. As long as it doesn't go down precariously, just really, really, really fast, you can still make money on this. So, yeah, it just sits there and just sucks money out of the market. And you can just go click on down through these things, and you can see that pretty much all of them, any stock you throw the thing at, it makes money. There's the only one that doesn't make money is if the stock falls. So if you have a sinking ship, there's nothing that it can do to save you. Once in a while, you see one where it's actually going down, and it just takes some small trades on the way down. Here's one where it's losing money. As soon as it pops up, it'll be back in the money. And here's Baba. So it made money. So it didn't make any money. So if it uses a couple of different things. So see these slopes here. This is my interpretation of a GAN fan. As long as you see this thing going down like this, it won't trade. It doesn't trade until it actually sees an upslope in the lower ones, or the white ones, and then you have to have a buy signal, a buy trigger on the Larry Williams percent R. It's not quite his percent R. It's a percent R based on his circle bar day. So anyway, I didn't want to spend a lot of time on that. This was going to be in the bonus round here for people that wanted to see some of the things that I was working on. But I just thought, since Steve showed some of the stuff he was working on, I figured, yeah, it's a good time for it. So let me stop sharing unless somebody has some questions about it. I will.
Yeah, what's the principle behind it?
You always make money. That's the basic fundamental principle. Buy low, sell high. Real simple.
Okay.
The principle is basically, you see these things just go, this percent R always goes below the buy signal. This is the buy signal on the bottom, and this is a sell signal on the top. So it typically just goes, you know, buy down here. So here's the buy signal, and it goes on up and it sells. So it buy low, sell high. Simple principle, right?
Mm-hmm.
And it just keeps on looking for those opportunities all the way along. And it takes, my old Holy Grail would take a profit, had a profit target. So you would scale down. If it go down a little bit, you'd buy. If it go down a little bit more, you'd buy. Go down a little bit more, you'd buy. On this one here, you don't go and buy all the way down. You only buy when it just turns on up. It says it goes down, 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 and then it pops on up. That's when you start buying. So it increases the probability of success of minimizing the drawdown, and it works really, really nice through the day. It's a great day trading system.
How does it work on daily bars?
It's just as well. It doesn't matter what the bar size is. It's the same thing. It works on any bar size. You can go 30-minute bars, daily bars. It doesn't matter. That's the purpose of the Holy Grail. It works on anything.
So you have that on your website. It's called Holy Grail.
So there's the kHolyGrail. That's the first one I did, and I made a presentation about 6 or 8 years ago on it. I even, in order to prove it out, I actually put together a random stock market in a spreadsheet and tested it out on that, and it made money. It makes money on any market. It doesn't matter. Any market, any time frame. Just the only downside is that when it starts going down and you haven't gotten a profit out of that position, it'll just stay into that position because the goal is to always make profit.
How are the drawdowns?
Depends on the individual equity. So if your equity, like I said, if I would have gotten into a trade right here, let's see, I think I saw one here which actually lost money. Here. So typically, typically what happens is when you get into a trade, see here got into a trade, usually there is enough of a swing up that it has a sell signal. Well, this one did not get too high enough, far enough into this. It just barely cracked the surface here. So it did not get out of this. And so what it does is, since it's going to be 100%, guarantee 100% gain, it will stay in the signal and it just keeps on losing money. So if you get into that one position, realize this is the thing in development. This is the best I've done so far. And if somebody has any better ways of doing it, I would be all ears, and we'll see if we can fix it up. Putting a stop loss in it sometimes helps on some of these things. It would have definitely, stop loss on this would have definitely got you out back up in here, but then you have to start the trade up again. So
Perhaps if the regime changes, you get out. If you have a regime filter that it's going up, your version of the GAN fan, maybe you get out when that switches and use that as your stop loss.
Yeah. So 100 different ways of cutting it. And so if you look at the coding style that I've adopted now, I've adopted this coding style that says, okay, here are all your initial conditions. When do you want to start the trade? I also usually have something that says how much capital you want to put in it. And then when do you want to enable the trade, right? So you got the Larry Williams hierarchy, you got how many days ago, you can enable it or disable it. You have the GAN fan, and you have a profit target. So there's a lot of different things, options that I have. And if you go look at the Holy Grail that's currently on the Excess Profits website, or Ken.Excess Profits, you'll see that there are 0 conditions. So the design of that was the Holy Grail has no options. You just basically just put it on and it automatically trades anything. So, but like I said, you get into a bad trade, you make one bad decision and you're going to stay in that trade because it will always stay in trying to get 100% profitable. So if you're buying options that are decaying, it's not a good thing to do. So yeah, the downward slope is not good, but sideways, downward a little bit, upward works great, no problem. So that's how I've been spending most of my time. All right, let me turn it over to Tushar here. I see him chomping at the bit there. So I will stop sharing and turn it over to Tushar, okay?
All right, thank you. Let me share my screen here.
We can see the toss scan screen.
That's good enough. Okay, let's start with that. All right, so everybody can see my toss screen, right?
Correct.
Okay. Okay, the whole presentation started because I started publishing that trader Rafiki alerts, and I'm just going to cover the basis of that alerts so that you don't have to depend on that alerts. I'll share the scans that I do for that alerts and what I do as using those scans, what I trade. I didn't coin the term, but I use the term trade small, trade often, using 30 delta verticals and just make consistently good money on it. That's the whole idea on it. And the mechanics of it, I'll just show you the mechanics of it, that what I do day in and day out, and answer any questions that you might have from that. Okay. So to start with, you get these alerts I publish these alerts as a trader, Rafiki alerts from Google Groups, and they are basically an addition to a scan that I do, meaning if the list gets updated, it sends an alert out of it, right? So this is kind of a scan. So like say this is a simple bearish scan. I call it FTM simple bearish scan here on this screen. So this is the scan as of today that appeared on my list as a, hey, these are all bearish opportunity that you might have done in last 3 days. That's what it is really. And I'll share the code, and that's the code, simple code behind it. I'll share the scan and you can put it on excess profit so everybody can use it. And it did have that Amazon trade on 4/5, April 5th. And of course, if you had bought options, you would have made 100 and whatever % gain on it. So that's why I kind of lied, but I didn't do that trade somehow, but I forgot about it. But so it does pick up those kind of things. And I created this simple indicator for it. Okay. So what is this? Let me start with what is this indicator and why I am so big a fan of it. Because at the end, all the indicators in the world are just showing the data that what happened. They are all the same. They are all showing the momentum. It doesn't matter. They are all history. The place where you make money is pressing that button. Like I didn't do the trade. Somebody else did the trade and they made money on it, right? So that's how it is. So my favorite one is, I'll show you my favorite indicators are the MOBO, momentum breakout and Bollinger bandwidth. And
there you go.
Yeah, we can see it.
Okay, so this time I had another monitor connected to it, disconnected that monitor, and then let's just do it this way. Okay, so all right, so these are my favorite indicators. This is MOBO, which is a momentum indicator on TOS platform. When it's a green band, its momentum is rising and momentum is dropping. Towards the downside. It's pretty straightforward. And I use Bollinger bandwidth. Bollinger bandwidth is expanding. Bollinger bandwidth is contracting. That's again simple. And what I did, I customized it. I made it. I wanted to see it's rising in the sense I did the 2-day history or 3-day history and then say, okay, if the curve is rising, it's expanding. And I said, you know what, I don't want to see all this other thing. It's too confusing for me, too much data for me. So I just hide the standard one and I use this one. So then I can see clearly that, okay, fine, Bollinger bandwidth is contracting. It's a 2 days delay or 1 day delay, it doesn't matter. So you can figure out where it's expanding or contracting. And along with MOBO, these are standard things. So after that, I said, well, let's even make it simpler. And I just added, I just created indicator out of it. I just combine those MOBO and things and then say, hey, whenever the MOBO is expanding and it is, okay, let me just put it all together. I think that's a better idea. No, give me 1 second. I messed up here. Let's do here.
While he's doing that, go up to the top where it says view options for people, and there's a zoom ratio, and say fit to window, everyone. And you will see not only all of Tushar's graphs, charts, etc., but you'll also see his face to the right.
Okay. So what I did, these are my two favorite indicators, like the MOBO and the Bollinger Bands. And I combined all these things together and made one indicator. Whenever MOBO turns red, I get a yellow arrow here, and it's expanding, so I get a green dots here. So, you know, I got a green on a MOBO, so I got an up arrow, but Bollinger Bandwidth is still contracting, so I keep it red. And whenever it starts expanding, I turn it green, okay? So to get rid of all this other noise on a view, I say, I'll keep this simple indicator. And I'm just going to share that with all of you guys. And I'm going to keep it simple moving forward. So at least you know what these indicators are. Okay, so this is one simple indicator that just shows on any chart, well, this up yellow arrow is like MOBO is turning green, and this is this is Bollinger Bandwidth, and whenever it's expanding, it's green. So the idea is go with the momentum when Bollinger Bandwidth is expanding. So that's the best bet that you can have in the market, that, you know, hey, momentum has turned upwards, and with the expanding bandwidth, meaning you have a full accelerator pedal to the floor, just be with it. And that's exactly what happened with Amazon on 5th April. You know, it was momentum bandwidth. MOBO was turning up and expanding bandwidth on 5th. So it happened on this day. So I say, okay, go ahead, go with it. And then you take this trade. Wherever you exit, I don't care. I mean, I only generate a place where it's a good thing to take any action. I like say this one would have been taking a downward action. Did it last long? No, but it was a good action that day. If you look further out, let's say this one was another taken action going upward direction. So, okay, that's good. So at least for a few days it lasted. This was an action where it says, hey, take on January 6th, but take a bearish stance on Amazon. Yeah, for a while it was good. And that is exactly what I'm looking for, because I usually mostly trade verticals. And this would have made money, enough money for me for that, my target. And that's all I care about. And like say here, it says, take a bullish trade, like a sell put vertical. Oops, that's what I mean. And here it says, sell a call vertical. Was I wrong? Yes, I was wrong. So I get out fast. So the exits are up to you. Whichever strategy you want to trade is up to you, but this works great. And how I incorporate into my trading style, I'll show it to you. Okay. So based on this indicator, I created this scan, two scans. I call it, this is a FTM simple bearish scan, which looks at the same code and looks into weeklies, anything that has a weeklies, thinking that if an underlying has weeklies, it has enough open interest in monthlies. And that's all I'm trying to filter out, okay? And I personally also exclude ADRs. I don't like, but I made an ADRs list, and so I don't want ADRs in my scan because they are currency dependent. There is a lot of manipulation in currency market, and I can't handle that stress. So I say I'm gonna exclude ADRs. So you can do it on your own about that. But if you like trading ADRs, I haven't added to this scan actually. And similarly, I have this bullish scan here, which will pick up all the bullish scans as of today or last 3 days, whatever happened into bullish scans, right? So like, and then once you have created the scan, I'll share the scan with you. You add the scan here, and you can create your watch. I mean, you can look at that as a watch list in your on your platform here. And then it's just, so these are all bullish scans. Come on, show up bullish, yeah. I just want to make sure it updated here. No, FTM simple bullish. Sometimes this is slow to pick up. It's still slow. It's not picking up for my updated list. Okay, I'm gonna go back to my bearish. Okay, let's start with bearish. Okay, so here's what happens. Whenever I'm gonna touch what I do as a picking up a vertical trade, right? And what we'll do, we'll pick up any random stock from my original published list, right? So I'm going to show that list, trader Rafiki alerts. Do you see this list?
Yes, we do, Tushar.
Okay, so let's say I started, I have 129 of those published alerts. Okay, so we'll pick up any day. Any day, anybody has a choice, pick up any day. I know. Okay, let's just pick up one of those trades. I don't remember, but I'll go for, I know I did Comcast. I did recently the Apple, the PayPal, and
we did Mandy a couple of days ago.
Yeah, the CMCSA, I think. I did CMCSA bearish on March 26th or March 30th, doesn't matter, both days it would have just worked out, right? So let's say, and DKNG worked out, all these things worked out. So let's just pick up this March 26th. I'm going to pick up this. I'm going to add that. Okay, CMCSA on March 26th. All right, and it was I think it was, oops, sorry. It was a bearish, okay, good. Let's go analyze screen, and bearish on March 26th. And I did, okay, yeah, I like that trade. And I did that trade around 34, 57.560. Yeah, that trade sell vertical. Okay, so it gives me 60 cents on a $2.50 wide spread, right? So that's me. So if I close it at 40% of that, so that would be I'll close it at $24, and $24 out of $250 meets my criteria of 10% ROC. So that I would have done this trade definitely, and I did that trade anyways. So how did that trade work out? I mean, it was pretty good trade. And all I needed to make was $24, and it made $22, $23, $24 somewhere around here on this day, 4/8. I closed that trade around on 8th of April. So it took like 1, 2, 3, 4, 5, 6, 7, and 8 days. That's all I care for. I mean, with most of my trades close in 10 days, less than 10 days, and that gives me enough capital to turn around and keep reusing. And if I look at this trade, why did I, according to this criteria also, you know, hey, March 26 somewhere I did that trade here. Yeah. This is the new indicator I developed just for OCTG, because this is a more simpler thing. I have a little complex things in there, but it worked out for me. Okay. What date was it? March 26th, March 26th here. Yeah, I know. It doesn't show me the green arrow, but here it's a green arrow here. That would have worked out too on April 6th, which is there. But the mechanics is that you know, I look at, I follow the signal, I follow the scan, and go out, pick up open interest, high open interest, 30 delta minimum, and then put up a trade and ride the expanding band, Bollinger Bandwidth. And most of the time it closes in less than 10 days, okay? And why 40% and 10 days? I'll cover that. But any questions so far, please, because I do not have a story here. So I go randomly at one place to another, but just tell me if you have any questions. I can just cover those questions right now.
Yeah, Tushar, I don't use TOS, but can you do back testing on TOS? And did you do back testing of your strategy on the underlying?
Okay, so if you're going to, yes, I did the back testing. I do not believe in back testing because it's a curve fitting. I definitely never do back. I mean, I do back testing, but if you anchor your trades on any arrows, it's pointless. It's never going to work because if I do change the equation to fit everything in there. It's like, doesn't matter. If in future it doesn't work, I'll change the equation again, new formula to make that everything fits again. So that's kind of I do back testing just to see that, hey, most of the time it works. Great. What can I do out of it? And I usually sell premium trades. I do not buy stocks. I go long options sometimes when I feel like, hey, this is a pretty gung-ho trade. I'll take it as a long options. But most of the time, I do premium selling. I do buy long options on day trading every day. Don't take me wrong, but there are some different strategies that I use. I'm just talking about this selling premium trades. So that's why I was showing you this thing back that, hey, pick up any of these days from this chart and then see, instead of, let's say, following any alerts, say you pick up any stock and show me, I'll show you that any of these arrows in this green dot comes, you'll have a successful trade more than 90% of the time. So if you can make a more than 90% of the time, 10% ROC on that trade, at the end, you're gonna make money at the end of the year and almost double the portfolio or the strategy size, a capital for the strategy size. So let's say if you don't follow the alerts, because the alerts have changed the formula over the period of time since I started sending the alerts. I designed those alerts for my wife because she didn't believe me and say, hey, give me simple alerts and then I'll trade everyday stocks. So I say, well, just to do this. And she's happy with it. So I started publishing it for friends and family that way. But just simple this indicator, which includes momentum and expanding bandwidth, pick up any stock and I'll show you how it made money. So pick up 100 instances. If it makes money all the time, I don't need to do back testing. And because I cannot figure out how to do profit factor and expectancy ratios, all those things with these verticals, selling premiums. And because my closing criteria is not exact, another down arrow, I close it at my target ROC. So it's kind of hard to do back testing for that. And sorry, that was my long answer to say just no to that. I don't back test.
Hey, Tushar, perhaps we can look at it using SPY. Everybody's, de facto ticker is SPY.
Yeah, but it's mostly
SPY, it'll work on most places.
Well, I can take any of those, you pick any of the, say, Dow Jones also, or you can pick up any, the spider sector ETFs. SPY is kind of a 45 degrees for a long time, so I don't believe in that thing, right? So pick anything.
Yeah, let's pick the technology one, XLT, I think. That's the one that had up and down.
Well, XLK, you are saying?
Was it XLK? I forgot which one.
Yes, technology XLK.
Okay, so fine. Okay, let's just pick up any day here, whichever day you want to pick. Whichever thing that they say, let's say this was the hardest one. So I got a signal here somewhere here, say, hey, sell, wherever I can be wrong. I can be wrong here, right? Well, that's pretty obvious. I would have gotten out here. I mean, that's not a big deal. Okay, let's just say another trade that it goes flat on you, really, right? So let's just say this turns around back again, good. This turns around back again on you, good. So that's not a good place to be. This always, of course, always gonna make money. Most of that. Okay, let's just, well, this is also going to make money, this signal at here. Let's just say here, right? I'm going to do a sample here. Let's just do this here. I think that's a good place to be. Here, I would have done a trade here because this is a yellow arrow down and a green expanding bandwidth. And I would have taken a trade at the end of the day. And that is October 26th on XLK. Let's just do that. Okay. Let's just pick up October 26th. 26th. I'm going to delete this trade and XLK. I have two choices, either 25 days or 53 days. I'll pick up 53 days because farther is better. And I also see the open interest. Open interest is always good in this sector ETFs. And I look at 28 delta, so 30 delta, near 30 delta, $5 wide. Looks like a good place to even look at the trade. Okay, let's just look at the trade. So vertical, and I got $12 credit on a $5 white. So, you know, hey, that's good enough for me. So $112 multiplied by 0.4, I need to make $45 on it, right? So that's it. If I make a $45 on it, it's pretty much close to 10% ROC. Can I make $45 on it? Let's see here. Yep, it's $63. So I made 1, 2, 3, 4 in 4 days. It made here expanding. So if I see here, you keep watching here, that number. That's $68, which is more than $45 I would have gotten out on that day. And that's 1, 2, 3, 4, 5 days. So it works. So this is my back testing. It's like, you know, hey, does the actual trade work on verticals? Because I don't want to do too much of coding just to do that. I would rather press buttons to make money than just figure out that if this strategy is going to work, because it does work.
Tushar, just a quick question. I understand completely your indicator and the directions and the Bollinger bandwidth and all that. Could you talk just a little bit about how you generate the up arrows and down arrows? What is that based on?
Oh yeah, I think I thought I showed you, but let's just show that again.
Sorry if I missed it.
Yeah, no, I'll definitely show it to you. Here, my basic thing is this, right? Okay. So this is a MOBO, the FW MOBO study. Study called MOBO. It's a standard momentum breakout study from TOS. What it does, it looks, these bands are 0.8 standard deviation. If the price crosses above this upper band, it's a positive momentum. And if it crosses below the 0.8 standard deviation, it's a negative momentum. And it's pretty straightforward. And you can pick MACD or you can pick stochastic, whatever you want to pick. This is just my favorite one. And the Bollinger bandwidth is like, say, this is expanding Bollinger bandwidth when green is above red, and when green is under red, it's a contracting bandwidth, right? So that happens while the momentum is growing up, there is still a contracting bandwidth, right? So, and this I combined using the same Bollinger bandwidth indicator from TOS platform. TOS platform has this Bollinger bandwidth. It just looks at whenever the 2 standard deviation Bollinger bands are contracting. Let me put that one too on top of it, so you know exactly what it means. Bollinger bands. So these two are Bollinger bands. I'm going to hide this guy, MOBO, right now. So when the Bollinger bands starts contracting here, they're just starting to contract together, right? So that's where the contraction happens, and these are the most contraction, and they start expanding again, and they start expanding again here, right? So I just to pick up the just to pick up the right place when it starts expanding, I overlap 2-day delay on it, and then I say, hey, the current one is about 2 days delay. Fine, go. It's expanding, and that I just want to. I don't want to make a judgment here. Is it expanding or contracting? Is it started? So I just say, simplify it. You know, hey, if it's green is above red, it's expanding. I mean, so if you're with me, I figured out how to monitor Bollinger bandwidth then when it's expanding, right? And when the MOBO is turning red, right? So I say, I got rid of this, put back the MOBO, the standard MOBO bands from Thinkorswim. So hey, whenever they are green, it's a positive momentum, meaning upside momentum, and red is a downside momentum. And I match up with the expanding Bollinger bandwidth. So I combine all this thing together, and I created this study called FTM Simple. Okay, here. Oops, that's okay. And then I created, okay, so see this yellow arrow? It matches up with the MOBO when its MOBO is turning green. And then this green dot matches up when the Bollinger bandwidth is expanding. Okay, so all that information just on one screen here. That's all it is. So here, like this yellow arrow, is, hey, I did cross the MOBO. MOBO turned red here, and MOBO turned, but the Bollinger Bandwidth was also expanding at the same time. It never contracted. And then again, the MOBO turned green here. Okay, great. MOBO is green, Bollinger Bandwidth is expanding. So I say I'm gung-ho on bullishness. That's all I want to do. Because anybody who picks up a momentum, everybody's a momentum trader, no matter what they say. Otherwise, you're a value investor. If you're a trader, you're a momentum trader. Doesn't matter whichever indicator you look at it. These are just two of my favorite ones. You can use MACD too. I mean, you can, if you overlay MACD here, it'll give you the exact same thing basically.
Hey, Tushar?
Yeah.
I've got a question for you. On 2-1, we have a down yellow arrow with the green dot on the existing screen. You
okay, yeah.
Anything out, yeah.
Okay.
On 2-1, we have a down arrow the green, so that would have maybe perhaps indicated short, but as we can tell, it's probably a bad trade, and 2 days later you get the upper. So do you have any techniques for like avoiding those whipsaws?
No, I just exit out fast. That's it.
You exit out what?
Exit out fast. I mean,
yeah, okay.
I do have a lot of other things along with it that goes with it. Like I do map, I mean, I'm not saying blunt no here, but I don't want to take this thing to more further discussion than we targeted for. That's why. So like I said, it was this time frame, right? This one. And I monitor this, right? I monitor these market profile. Right. And it's going towards congestion. There are references, there are a lot of other nuances with that would have put me avoided this thing. Plus, let's just look at the underlying things that's happening on that day. Okay, not only this, but let's say 129. This happened on 129, right?
Yeah.
Okay, let's just look at that. How would have it saved me? Let's just go 129, 29, and I'm looking at, okay, 49 days, and it's a bearish. Okay, look at that at 35. Well, hey, 35, 21, fine, I'll take 35. Let's try 35 thing, vertical. And look at $1.67 on 135, so 167 multiplied by 0.4. I need to make $66, 66, and that would have been okay. Hey, $66 out of 500 is more than 13%. So looks like a credible trade for me. I agree. Would I have lost money? Yeah, I would have lost money here by 141. And I would have exited exactly around, because I was wrong, I would have exited fast on it because I was bearish on it. It was going up. And then what happened, that if I look at the chart, it turned around, where did it go? Here, on 120. I would exit on 120, definitely. So what would have happened on 120? This is the one, where is this? 129, not 120, sorry, what was the day? Sorry, why am I saying 120?
I think it was 2-1, but that's okay.
Yeah. Well, this day. So I would have exited with $30 loss on it. Fine, I'm okay with the $30 loss. I mean, you have to lose sometimes, right? So it's okay. And then that day I would have made up for trade too on it, which would have made money for me, right? So that's okay. This is the part of the probability trades that, hey, if you are going to be wrong 20% of the time, that is one of those 20% of the time that you were wrong on it, right? With $30 loss instead of a further loss. So that's okay. I mean, I'm not here to protect based on just signals. I mean, I have to protect based on my profit, right? So, and I have my profit targets, right? So, hey, 10% I'm out, ROC I'm out, and if I'm wrong in any case, I'm wrong. I have to get out, right? If I stay on it, I call it hopium, and I don't want to be on a hopium because that's the worst drug in stock market. That if you keep saying, I'm going to be right, I'm going to be, I hope this turns around, or goes back again down. I don't want to be on that trade. Okay. Any other question? I mean, this market profile is a big discussion in by itself. Like, so I'm not going to cover that right now.
Tushar, this is Judith. How are you? I have a question about how you're, well, I know the answer, but I want you just to explain, how do you determine your stop loss? Are you doing a ratio of win to loss, and how do you adjust when it's going against you?
Yes, let me tell you. And again, Jack, look at that purple rain.
Right.
I would have avoided that trade.
Yeah.
I wouldn't be eager to take a trade in purple rain. Purple rain is nothing but to everybody. I'll show you what purple rain means. It's a combination of Bollinger Bands and Kettner channels.
When the Bollinger Band is within the Kettner channel.
Yes, so yes, exactly. When the Kettner channels are narrower than the Bollinger Bands, 200 dB. Well, no, Bollinger Bands are narrower than the Kettner channels. I call it a volatility squeeze happening, and I plot it with the purple dots on it. So that's a volatility squeeze, and it doesn't matter. So it looks like it was going to come out this way, but it slipped towards the upside, right? So there is the danger of head fake during squeezes. So I avoid trading in purple rain. So this is a big, I mean, you don't have to take trades every day. You find another thing that day to trade. So I just say, I avoid it to being wrong. So I would have avoided that trade by that time. Make sense?
Yep.
So so then the question would be, hey, I would have taken the trade here for the upside, right? And yeah, can that have been a whipsaw? Yes, that would have been on a whipsaw again, right?
But that's so yes. After the yellow arrow, would you still take the trade then?
Which yellow arrow? Which date?
I mean, you get the yellow up arrow 120, but you're out of purple rain several days later.
Yeah, so that's what I was pointing at too. So, again, yes, I mean, technically, I mean, if I put a rules down that don't do that, I would take a trade here on this day, 122, right? Let's do the 122. I mean, is it feasible on 122 to do that trade? And of course, it's going down at that point of time, right? Let's just check it out. I mean, I don't have a problem checking out on one. Why keep saying 122? This is, yeah, 122. $122, and I'm going to take a bullish trade on it, 56 days and 28 days. So let's just try 56 days as an open interest around 30 delta. Around 30 delta, yeah, there is enough open interest. Let's just do this trade, 125, 120, 27, sell vertical, 95 cents on a $5. It doesn't make me too excited. Let's just say, hey, $95 multiplied by 0.4. I need to make $38, and $38 divided by 500. Oops, 38 divided by 500 is definitely not 7.6. So it doesn't jive with my ROC percent, which should be more than 10%. I would have avoided that trade. I mean, I'd say, well, I'll wait. I mean, so so I would have ignored that trade that day, okay? Because that is my criteria. And the reason what happens, if I had gotten more credit, profitability expectancy, then I would have done it, because then the volatility was in right place and everything. Everything falls into place. I mean, this is just a macro level view of the things. If you are not getting a 10% ROC, things are not right for you. Don't do it. That's what it means to me. Okay, and I don't do it. And if I go further out, definitely it's not going to be 10% ROC. So and I don't want to go to further closer to at the money here either. So I would have avoided that trade on both the counts. Jack, if that answers your question.
Yeah. Between the rain and the ROC calculation, You're protecting yourself from bad trades.
Yes, I'm ignoring those trades. Yes, I mean, they don't meet my criteria, and I'll show you my criteria in the next segment. Before that, I just want to cover the study here. Hey, this is simpler study, and it's just, I mean, underlying it covers a lot of things as a volatility and other things. Okay, so I brought these three things, right? This rain and this Bollinger bandwidth. And most of the time I've noticed, hey, if it's a rising from the bottom, it works much better instead of rising here. Anyways, it's rising here, that would have worked better. Yeah, it would have worked better after that. Great. So this one would have worked much better. Yeah, that would have worked much better. But usually I say I got the rising here. Well, it did work better here in case also here works much better, right? On that underline. Okay. So any further question about the mechanics of the trade? So the rule, not the rule, but the standard thing that I follow is, Bollinger bandwidth has to be expanding and it has to be in a right direction, right? So I'm looking for, let's say, bearish trades. This is a good bearish trade. I'm not even looking up here right now. I'm looking at here. Say, yeah, that looks like a good bearish trade. And then I'll see which one was that. I was looking at this. Yeah, so it's green, yellow, yellow arrow down. And it is also happening around at the bottom here. Which trade was that? I was talking about this trade, yeah. And it, of course, it had worked out. I mean, even if I don't look at the top, I can just see from the bottom which trade would have worked out. Let's just pick up any randomly. Say I pick up XLF here. Let's just pick up XLF. Is there a bearish trade? There is a bearish trade around here, but that would have not worked. If I see all the other criteria, I can bet you on that too. Let's say if I pick up on 2-1 February 1st on XLF. What happened on February 1st on XLF as a bearish trade? 28, 31, 32, vertical, 31, 33. I make it 31, 33, 33 cents. So it's pretty less. Not enough credit. 33 multiplied by 0.4. I need to make $13 out of $200. That's 0.6% ROC. I wouldn't take that trade, right? So that's a simple calculation for me, and that kind of protects me all the time. The reason you don't get enough ROC is because something's not right. I mean, I can go into detail. I mean, I've researched all the details. Why does that work and things? But that is another day's worth of a topic. So I just want to. I'm not saying trust me, but you can do your math too. But I've done some math and it doesn't work for me. So and it didn't work anyways. But that's okay.
Hi, Tushar.
Yeah.
Can you say a little more about your choice of 40% exit?
Yes, I'm going to cover that in the next segment in my spreadsheet that I was going to show. So
okay, great, thanks.
Quick question. Quick question, Tushar. I've never tried to do this on demand. This is really cool. I appreciate that. I've never seen this underlying and P&L graph. Is that available? I'm going to go check when I exit here. That's available on
TOS platform. Yeah, it's always available. It's been there forever.
Yeah. So you should also be able to do the same thing, just buying long calls. If you had bought a long call on October 21st, there would have been, you would actually see the P&L.
Oh yeah, look at that. Let's just look at that Amazon thing that you did, right? Yeah. I'll show you that example. Like say Amazon say, hey, 4 or 5, I got a signal to buy, right? Up and expanding bandwidth, right? If I in here, and say, hey, I avoided that here up to rain, and then I did it here. I did it here. End of the day, 4/7, April 7th, end of the day, I buy a call, 16 delta call on Amazon. 16 delta is my go to delta, right? For when I'm long options. Okay.
16 so let's delta, not 30 delta.
Yeah, 16 delta. This is April 7th, Amazon, and 45 days out. I'm okay. 45 days out, 16 delta. Not enough strikes here. I'll put 40 of them. Let's see if I get 16. Oh, still not. Let me do all of them and see. Oh no, I already have. No, that's not the one. Okay. 16 delta. Okay, I have 18 delta here. Okay, I'm gonna pick up 18. I'm not gonna be too. And that's the May 21st call, right? I buy that and look at that. After that, oops, sorry. It's almost 100% on that. Sorry, go back. Come on, Tushar. Here. Okay. So I paid $3,000 for it, right? For one call. And by that time, 413, I made 2,500. I'm pretty close to, not 100%, but maybe 75% or more than that. 80% of the return, right? So 1, 2, 3, 4, 5. And then I usually exit with my profit targets. I don't wait till it goes and turns around and things. I would have exited somewhere around here to 50% target on that thing. I would have been exited here.
Go to 30 delta.
30 delta, yeah, I'll show 30 delta. Compare the 30 delta. Okay, so 30 delta, I would have paid what? 5,600, right? Yeah. And that's a 4,200, almost same thing, but on this other day, I would have made 2,800 on it, right?
Is this thing adding those two? Oh no, I see. You're
no, I unchecked the other one. I checked the other one here, or even just so. Like if I put it both here and I can change the date here. What was the date I wanted to exit out? Like say here maximum, just for the sake of doing it, right? 413. You can change it to 413, and then you can see the difference here, right? So the first one did 2,505 divided by, I paid 3,000, 23020. That's 82% return, right?
Right.
Okay. And on the other one, I did 4,200. Oops, sorry. 4,205 divided by 5,612. That's 74%. So that is the difference between 16 and 30 delta.
Okay, and now the next thing though is that that this is going to be a 3 to 5 day trade, right?
Yeah.
So why wouldn't you go? You are the king of the 40 day trades, etc. But why wouldn't you choose a weekly trade or a much nearer in when you know that the trade is only 4 or 5 days?
Yeah. I would have. I was just picking up here 45 days of things. And even if you pick up the other one, another reason being, I I would have. I'm not saying no to it. This was just a sample I was showing here. It would have been weekly because I didn't do the trade, right? I lied on your survey that I made 100% because I looked at the chart and I know that I would have made 100% easily on this thing. So I lied on that thing, but yes, it doesn't matter. Whichever you feel comfortable with, you can do it. So let's just, if you do a sample one on that thing, let's just for the sake of doing it, let's just pick up. I would have weekly, right? Weekly, why? Okay,
weekly way before then.
Yeah. So let's say 9 days. The one that expires, well, there was a monthly trade that was expiring in 9 days too, right? Yeah. So I would have said then 9 days, right? Because we want 3 to 4 days or at least minimum 10 days, right?
Right.
So I'll compare both 16 and 30 on that call, right? So let's just put the 30 delta call and then put the 16 delta. Exactly 16 delta. Okay, let's just do that. And then what happens in that same thing here, that day here, right? 413. Yeah, okay. So 965 would have made more money than 100%, of course, and this would have done 200% on your 30 delta trade.
Right.
33. There was a 30 delta trade, right? Yeah. And this is 900. This is also a great trade. $2,000 on 1,000. Yeah. It's almost double that trade too.
Yeah.
1,905 divided by 965. That's 197%. And this one is 4,800 divided by 2145. That's 223%. Yeah. So that would have worked. Weekly would have worked even better.
So my question to you, you know about the calendar, you know about these things coming out. Why didn't you take those two trades?
I was busy day trading. That's I was making busy day trading, and I do my TSTO trades after 12:30 and something. So it gets busy. I mean, it's just, I don't know.
So one of the problems I have is prioritizing.
Yeah,
right?
exactly. That's what it is.
For me, when I see a trade that's in the past over 34 years has been 100% probability of success, that's number one priority for me. I don't look at day trading. I don't look at anything else. That's my number one priority. I actually entered the trade before I heard the announcement. So mine, I actually dipped down and then came right back up. But yeah, I always try to, when Larry Williams or Jake Bernstein say those are high likelihood, 100%, 99%, that's top of my list. So
yeah, I know. I agree with that. My daily target is in day trading is, if I can make 10% ROC every day, I'm happy with it. If I make more than 30% ROC that day, it's a jackpot. Yeah.
So what's your asset allocation across the various trading schemes, strategies you have?
So I focus on only 3 to 4 major things. Of course, one of this is TSTO, this one. That's a consistent. Second one is I do back ratio insurance buying. That's just an insurance trade. That's not a really profit income trade. Third one is I switch between whichever horse is running. So that's kind of a long-term trade. And then fourth one is day trading. Simple. That's it. So I do that. So my asset allocation is depending on if it's a retirement portfolio or a day trading portfolio, or meaning it's a qualified portfolio or non-qualified portfolio, and then I just keep it that way.
So on this particular strategy, that you're doing, what percentage of your portfolio do you allocate to this?
50%.
50% of your entire portfolio.
Yep. Because it's easy peasy trade. So I say, well, I don't have to sweat about it and keep it that way and keep making money out of this. So 50% allocated all over towards all the IRA accounts and all the retirement accounts and my kids' accounts where I don't want to pay too much attention, but at least trade a day kind of thing, and friends and family accounts. So there are too many accounts that I have to manage. So I just use this as a go-to strategy to make money in those accounts.
So one of the things that I've been listening to you for a while, and I've tried to use some of your information, in particular your use of alerts to get out.
Yeah.
And so what I did is I put on alert on, I don't remember what it was, on something, and the alert should have happened to my phone, to email, to something about 9:30 in the morning. And I did not get the alert until 2 p.m. Is that what you should be seeing, or is there something I have got set up incorrectly? Or when you get an alert, does it happen immediately?
Oh yeah, right on dot 12:15. If I put it by time, that it happens at time. If I don't put it by time, then it happens depending on what chart aggregation I have used. Is it the daily, or is it 15 minutes? Is it 30 minutes? The end of the 30-minute candle, or end of the 15-minute candle, or end of the day candle? It depends on that. Yeah.
Got it. So it must have been, so what I did is my alert must have had the wrong time increment on it. It must have been a daily
Chart
alert as
aggregation.
opposed
Yeah,
to-
yeah. When you create that alert, there's a chart aggregation on the top.
Got it.
Yeah, yeah.
Got it. All right. Thank you. That probably solved the problem. Thanks.
Okay.
Yeah,
no
Ken,
problem.
if you use push notifications and if you have the mobile app, there's just no delay. Actually, sometimes
Yeah.
push is even faster than the desktop.
Correct.
Okay.
Yeah, you're right. Sometimes it does happen that way.
Right.
I was expecting it to my iPhone, but I did not get any alert, and it went against me. So it's like, all right. So I got out the next day.
I usually look at the chart right. Are you talking about TOS or are you talking about TradeStation?
TradeStation works flawlessly.
Okay.
I've never had a problem with that. It's only tosses that I've had.
Okay.
I'll have to look at the aggregation though. I think the aggregation.
You know what?
Yeah, I think so.
There's an easier way to solve that problem, Ken. If you look at the chart that you're trading on, right click and create alert and set your price, then you don't have to worry about aggregation.
So it goes by the underlying chart as the aggregation.
Correct.
Got it.
Yeah, I do. I mean, push notifications to mobile devices. So once it comes to my phone, it also comes to my watch. So I mean, I'm walking around and I got ping. Okay, here something's happening. Let's go back to desk. So you have to check this button too. I do not send text messages. Text messages kind of adds delay. So yeah, I mean, I never send it to SMS. Basically, that's what it is. Okay.
Got it.
Tushar?
Yeah.
Could you go back to what you use for stops? You had that question earlier.
Yes, thank you.
Oh yeah, sorry. Yeah, that was the major question. Sorry, Judith.
No problem. I'm being patient. I know you have so much to share. And if you can focus on the math, because there's so much thinking that you've done around this strategy that is unveiling all of it would take a long time. But if you can just focus on how did you come up with your 40% target and the two times credit loss, the math behind it.
That is a good segue to the next segment. That also covers exactly what you're asking for, right? So my first stop thing is, you know, if you, let me, on the monitor tab, let me just pick up another account that I don't want to display too much sensitive information. Okay, let's just pick up this account. I'm gonna show you a few trades in this account that I've been doing. I have multiple accounts that I do trade, multiple logins, and it gets complicated to show all those things. But you know, hey, say these are the few trades here. Say verticals being happening. I keep monitoring this PL percentage on these things, right? So say this trade I have done. This is some sample portfolio here that has a, you know, each trade has a one contract thing. But look at this. This is at 31% of the credit received. So I monitor this. Okay. Dash has a 7% of, so I'm profitable on Beyond and Cisco. I'm right now negative on it, 3%. What does this mean is, say if I received $1 credit and the 31% of the credit received, I have profitable. So I'm at least making 30 cents on it. That's what it means. Okay. So when do I want to get out? When it becomes 40%. And for that 40%, I already have an automated trade in it. That's gonna go working order. You know, hey, close that trade. What is this, Lily? Lily says close that trade around whatever, 82 cents. And right now it's at 94 cents and a good till cancel order. So I don't have to come back and close the trade for the profit. It will close it by itself. So I don't have to worry about it. But as an alert, what would I do on this thing? So say this is the trade I want to close, right? But like what he was talking about, Ken, say, hey, alert. So this is I would do, create alert on this trade, and this is the vertical. Right now, that's my, I say, let's just say, hey, when it becomes, when it's going to be a when do I want to get out of this trade? So if I'm losing another 40% of the credit received, so say, hey, what would that be? So say I want to get out at 82 I want to get out at 82, and I must have traded there. Let me just give the right math on this thing. So Lily, let's go to Lily on this count. What is the Lily doing? Okay, oops. Lily, so Lily is making money for me right now, right? And I want to close it at 40%. What was my trading prices on it? So I pay, oh, let me just look at the trade itself.
About 38.
Give me 1 second. I want to be exact. I know I'm not with you right now. I'm gonna. I just traded last week, right? Yeah. So say I traded this. I bought it at. I sold it at $1.37, right? So $1.37. So 130. Oops, 137 minus 82. I want to make $55 on it, right? So if I start losing $55, I'll close it. That's what I mean. So let's say, hey, my alert would be, where did I go? Here. So activity. So I want to create an alert.
Hey, Tushar,
yeah.
Would you close it at $55 loss or $110 loss? Is it 1-to-1 or 2-to-1?
No, whatever I'm making right now, whatever I was targeting to, not to $1 loss.
Oh, I see. So the loss would be the same as the winnings.
Yeah. So I would be closing at 137 plus 55. If it becomes 192, I'll be closing it.
Got it.
Right.
Got it.
So 192. So I'll put it at 1.92. So when this vertical's price becomes $1.92, so close it. Okay. So that's the alert I want to create on this vertical on Lily. So I create that alert, and then it sits in my alert. That's the alert. Whenever that becomes oops, go back, makes it $1.09. So when this happens, it sends me a text message. It doesn't close it automatically. So then I can react to it. I mean, if I'm on a hopium, I'll still.
What's your aggregation period there?
This is it doesn't matter.
That's what I thought I had in. That's exactly the way I thought I had entered it.
Okay.
And it ended up at the end of the day.
So because the bid and ask spreads on both these tries doesn't match up exactly, that's why I probably couldn't created alert. But after the market alert, usually I get these alerts early in the morning. So say at 6:30, I'll get this alert. But then I say, hey, the conditions don't look right because at opening the bid and ask spreads are too wide and it's all messed up. So I wait till and come back and say, hey, how much does it cost after an hour? Oh, okay, it's still within my range, so I'll leave it. So that's what happens. So I'll get an alert again, and then I'll say, okay, I put alert again. Say, don't close this alert out. Keep this alert on. Every time it goes that $1.92, it'll alert me. Hey, you need to pay attention to this. That's all.
That's what I thought you were. That's what I thought I was going to see too. And when I didn't see the alert, I was confused. I'll have to figure out some way to check the aggregation period. I think that's probably the key. Somehow or other, there should be an aggregation period in that time frame.
Let's see. There was an aggregation period here. I know there was no. Actually, this is the price condition I'm waiting on. There is no aggregation, so it can happen next second too. It doesn't matter, right? Yeah. So
I agree.
No,
I agree. I don't know why the alert took forever to come to me though. So that's what I'm trying to figure out.
I usually get alerts at 6 after market open most of the time.
Okay, but not during the day, like at 10 o'clock in the morning or something like that?
Yeah, you could get that then because the market moves, right? And the because so I could get it anytime that it happens. That's condition happens.
Okay. Hey, at Tushar, we have about 4 minutes left to the session. I wanted to just try to get a quick feeling for people what they want to do in case somebody wants to leave. What to do on Monday? What's your recommendation for Monday? And you've got your postings up there, which is probably all you need, right? But if somebody wants to stay along a little bit after, I'll stay along a little bit after noon. But anybody else got any suggestions about Monday? Put it in the chat or raise your hand or whatever. We'll see if we can get through this in a few minutes here, and then we'll let Tushar. Do you have much more there, Tushar, yet or not?
Yeah, I have the math behind the whole thing. Why all those things that I have set as a why 40% and why 10 days it works, and so it's just the math behind it and why it works, and I just wanted to cover that. So stop losses are why stop losses at particular $1.92 I put, right? So as an alert, not a stop loss. First, so I might take 10 more minutes.
Okay. All right. If everybody's okay with that, just hang around, and we'll close it out after Tushar is there. And I haven't seen any other entries into the chat as to what people are suggesting for Monday. So keep on going, and if you have any suggestions, actually on the Access Profits website, I put a link to your recommendations on the previous month's meeting. So I don't know if anybody has seen that yet. If anybody's watched the video, they should have seen just below the video the thing about the Tushar's link to where he sends out or puts out his recommendations or his suggested trades.
Okay, so this is how my suggested trades list is. Okay, if you look at this chart here and this, so this popped up in last 3 days here. This scan I'm going to send to everybody. I'm a share. So like CHTR is my Monday list. Okay, fine, great. It was actually, I should have done it on Friday morning, Friday close. But you know, hey, so if you go through this list, you'll see these are my Monday list basically. So hey, this is a great one to get in. I know, hey, purple rain. You can wait or choose not to wait. This is another trade that happened yesterday that I should have done it. Ring, cat. So you can just go through, and this list changes every day. I'll share this scan. It picks up, like, so this was a bullish one, and I have a bearish one. So this is a bearish scan. So it says, you know, sell, short this thing, guy. Short, you know, hey, why this bearish? I think something's wrong here. Lily is not on a bearish scan yet. It's a bullish scan. I must have made a mistake here. Give me 1 second. Where is my bearish scan? Load scan. Simple bearish. Below 0. Yeah. Okay. Scan. Update. I must not have saved it properly. That's why. Yeah. Okay. So Lily is not in there. So these are my bearish list. I'll change it. I have to log out and log in again to do simply refresh it, but it come on, bearish. It's not refreshing here because Lily is.
Yeah, Lily is in the. For some strange reason, Lily is in the bearish scan.
Yeah. Why about 0 mobile 0? This is that. I'll fix the list and send it to you, but okay. That's what my list is. Yeah, this is not. But okay, let's just move on to why I do that thing, because the criteria was, again, when I look at the vertical, it has to have open interest, enough open interest. It has to meet my ROC criteria, at least minimum 10%, and this, of course, the study has to agree with me. The Bollinger Bandwidth is expanding and the MOPO is turning green. That's pretty straightforward, and do a 30 delta vertical, right? So that's the basic premises. You can add more nuances to your liking. I mean, I do add more stuff to it because sometimes out of 10, some things don't work, so that they don't work. So I don't take those trades. But why do I do that is here. Okay. So let's just say this is again, I don't do back testing, but I do Monte Carlo simulation. And I like, because I randomly generate simulated trade, market things, hey, and I give a bias to it, say if, just to simulate my probabilities, right? If I do here, like say, even if I do 68% probability of winning on this randomness, so the randomness looks like differently, like it will look a little different here. Come on. It's still calculating. Okay, so it looks different. So it's like how much bias I want to give, right? Say 65%, it'll look a little bit more different. Oops, battery's getting low. Okay. Okay, still calculating. Okay, so it looks different. So I just managed my randomness here using the probability that I want to check, okay? So Monte Carlo simulation is nothing but pick up a random number after every event, after every change, and then go up or down depending on whatever the random number comes out to be, and then say, hey, sometimes, I randomly picked up more. And I've seen that, I can show you that all our indicators, doesn't matter, stochastic, MACD, Bollinger bandwidth, they all fall into place even on random market simulation. I've shown this thing before too. So all I'm trying to say is all those indicators are trailing indicators. They don't predict anything. They just say that this is what happened and this is what's happening right now. And you can act based upon that information, right? So that's all it is. So backtesting all of those things and making it fit that curve, it's kind of I don't really too much believe in it because all the indicators work, so it doesn't matter. But say if I had a random moving forward, what is my expectation, profit expectation moving forward, and how would I put up a trade in it, right? So let's just, all these blue things are something that I can change to simulate things, right? Okay. Here, I'll start with the basic things. As I have 120,000 portfolio for this strategy, particular strategy, and I'm going to use all the 100% of it to do that. Okay. Approximate trade days, according to Tasty Trade, if you are there any followers of Tasty Trade people things, they say, hey, do it in 21 days. Great. Do it in 21 days. Fine. But with adding X, and they don't even talk about directionality, don't worry. Time trumps direction. So they say, hey, don't worry about directionality, just do it for 21 days. I say I added some, to me, you have to be right directionally to make any opinion, develop an opinion. And I use it, my indicator, basic indicator, mobile, or some momentum expanding bandwidth. To me, that works great. There might be something else that you're comfortable with, use that, doesn't matter. But with my indicator, I get a much better probability of winning. I'm right most of the time, not most, meaning more than 80% of the time, let's say. I'm actually more than 90%, but as a conservative thing, I'll say 80%. But on the math, I'll put 72% to see if I can work with it, okay? And then I'll change and I'll show you if I'm right that 80% or 90% of the time, how does the portfolio will behave, right? And what happens that because it's expanding bandwidth, they are like a 3 to 5 days trade, like Ken says. Those are the kind of trades that I want to work with. And that's why I plot that into my scan that, hey, work with expanding bandwidth, you'll have a much better success and shorter duration of the capital on the table, right? The risk management tool for me is have that capital on the table for least amount of time. That's the best risk management. Hey, if you're on a blackjack table, if you say I went with $120,000, and if you keep rotating that capital, you don't put all the capital at the time, but even if you are going to, you're going to put on a 50 blackjack tables at the same time and just keep rotating. It's a different places, right? So that's what I mean by say, hey, keep the capital to minimum on the same table, right? So that's the best risk management tool to my opinion. Okay, so I do get less than 10%. So I'll show you that, but I'm just picking up a standard, other people's research, and then how does it work with, right? So I said, I'm going to simulate 72% of the randomness. Luckily, it did 75% here in the gray, right? Because I don't know, I cannot do exact randomness, right? So if I do say, hey, 73%, here, this time it picked up, it's doing something. It's still calculating. Come on. Okay, it did 74.96%, right? So let's go back to 72 again. 72 again. Let's see if it goes closer to 72%. I want to be closer to 72%. Okay, let's 72.95%. It did actual one, right? So again, what I did, the number of contracts per trade, I would do 8. The reason being, on any trade, I don't put more than 2% of the capital that I'm going to use. That's based on a Kelly's criteria. I put the Kelly's criteria as equation, and if you're sitting on a blackjack table, do not bet more than X amount of, depending on the probability, blackjack tables probability and things, and that percentage with my trades comes out to be 2%. So I say, if I'm sitting down on this strategy with 120%, $120,000, I don't want to bet more than $300 on a spread size. So I do between 2.5 and 2.5 spreads. I mean, $250 spreads. So average is out around $300. So I'm just picking up an average number 300. So it becomes 2% of my total capital on each trade that I put. So if I am going to put that much trade, so I have to do with this capital, at least I have to do either 8 trades a day or a trade with 8 contracts on a day, right? So that's what it means, okay? And I'm expecting, say, on each vertical, yeah.
So one quick clarification, that $300, is that the premium received or the risk?
No, it's the spread size that I'm putting the trade on.
Yeah, I understand, but what's the $300?
Spread size. So if you do 21 and 24 put vertical, it's yeah. So it will be $300, right?
Wing size.
Yes, a wing size. I mean, I call it spread size. And the question that you are asking is this. Answer to that is this. So, say if I put a $5 wide spread and I get $1, not $1. So say if I do $4 wide and I get a $1 wide, $1 credit on it. So that would be 25% of the credit received. I'm getting credit on it that much, right? So that's what I mean. So I say, see if I do $3 wide and I just say, hey, 30% credit. So hey, no, on 8 things. So if I was doing say 1 contract here, let me explain it to you. So out of $300, if I get $30 credit, so I'm getting $90 on it, right?
Yeah.
Credit. Yeah, that's what I mean. So it says, but it's hard to pin down a 30% credit on a vertical that you are going to add, right? So I say, hey, anywhere from 25 to 30. So I usually put 30. Say worst case scenario is 25% credit I receive, right? On a $5 wide or a $3 wide. So that would be this. I mean, or I can get better. I can get a 30% credit. I mean, of the spread of $300, right?
Yeah, I'm still a little confused, Tushar. Even with 1 contract, $5 spread, the wing size is $500.
Okay.
And you have a spread size of $300.
So I'm saying it's a $3 wide spread, wing size. That's what I'm saying here.
All right, okay.
It's not a 5. I mean, you can have a 21 and 24 put vertical, right?
Yeah, I got it. Now.
Yeah. On a $5, it will be $5, yes. But then I want 2% of the capital. So if I start doing 5%, it will be more than 2% of the capital. I don't want to use more than 2% of the capital of my total capital on each trade. So I'm just putting an average for a math here. That I want to keep this 2% is a critical. That's why I put it in red. I don't want to go above 2%. I can go lower, right?
Yeah.
So like say if I do, instead of 8 trades, I do 4 contracts, it will be 1%.
Right.
Of the capital at a $3 wide wing size, right?
Right.
So I say, hey, $8. I'm putting 8 contracts here, and then I'm doing that. Okay. So say either 30 or 25. So I say, you know, I put 27 in the middle somewhere. You know, I average out to 27% of the, I get a total credit that I received on that spread is that, you know, not 50-50. I'm not doing it the ATM. I'm doing it 30 delta. So it's good to expect around 27% of the credit of this wing size, or I call it spread size. You call it wing size. Okay. All right. So, and I want to close that trade at 40% of this credit received. So say I received $648, 40% of it would be $259. So I'll put that automated closing order, and I want to risk only 80% of that credit received. So my target ROC becomes 11%, right? And at 25% here, it's exactly 25% here is exactly going to be 10%. So so I keep it as a conservative math here. So you know, hey, this is what I do. So to get my 10%, I have to do at least 40%. If I do 50% of the credit receipt, meaning I wait for more money, yes, I will receive more. A target ROC will be 12 to 13%. I agree, but I'm happy with my 40%. The reason being, I'll show you the simulation. So say if I did 50%. So I can do it 100% closing. That would be our 100% that you were talking about, 600 and 600, right? Jack, your question that you asked upfront a long time ago. So that's why 40% I reduce it down to 80%, right? So let's say I get 31% performance, average performance on this randomness on that thing, right? Yeah. And simulation period 252 days of trading days. Possible open contracts would be 400 contracts any given day. It could be not positions, but it will be mostly 50 positions with 8 contracts, so 400 contracts, right? Trades to be made per day too. So that's just a non-significant numbers here. Just for my understanding of how will I react in the market, but that's all it is. Okay, so if I change this thing to 40% and I start closing early, because 40% happens faster than 21 days. So I say now, hey, I usually on my old data that I published in 2019, my average day was 17 days at that time, where I was not using the expanding Bollinger bandwidth criteria. So that was my original things. And you know, hey, I increase my average performance things on it, right? Okay, so I keep this 25 and I'll make it 27 here. And I'm just now, I'm not selling anything, but I'm just getting everybody excited here that, hey, if you are right more of the time, and if you're able to close, oops, sorry, what did I do? Okay, 27. And I close less than 10 days. Okay, so maximum 10 days I'm saying here. I close less than, that's what's happening with the expanding Bollinger bandwidth that is implemented in my trading pattern this year. Most of my trades are close under 10 days, sometimes 4 days, sometimes 5 days, but hardly it has gone more than 10 days. Sometimes probably a couple of times 11 or 12 days when it was slow, but that's what it is. And my probability of winning is definitely almost 90%, but that's too outrageous. So I'm just gonna put say 80% here, right? And I'm still keeping this criteria here, keeping it at flow 40% and things. And my target ROC is still at 11. Look at the average performance that you can get out of just doing this in and out. That's it. How many trades did I do? 1,260 trades per simulation period, depending on this criteria, right? And the return that you can gain out of it. I started with expanding Bollinger bandwidth this year only, so I don't have a number to prove, but I'm looking forward to publish this kind of a number by end of the year. I believe in it. In that, when you trade and you have to be right directionally, and you also sell call verticals in the down direction. So I'm trading both. I'm not waiting for a long only trades. I'm trading both. Most of the time, my bearish versus bullish trades ratio is 69%. So far, it has been 69% right now. So I might have a 7 call verticals compared to 10 put verticals at any given time of the day. on my portfolio. So it's not like I'm only biased towards bullish or bearish. I keep both, and I do not know when will I close all my trades if there is a black swan event. But whenever it happens, I might not get this, but I'll still get a much better return. But I'm not gonna just wait and not trade for black swan event. I'm gonna keep trading. Black swan happens. But on the same time, jackpots also happen. So that day I'll wait for jackpot too. So I mean, I don't wait for jackpot to trade either. So I don't wait for black swan to trade either. So I mean, you have to be engaged in the market, right? But that's just something to sell. But even if you don't sell anything, keep conservative. Hey, 15 days, keep 75%. I say 75% is still a good expectation with Bollinger, that indicator that I show that, hey, I can be right, along with the probability of 30 delta verticals, right? They also give you 70% probability of winning, but probability of touching is a little different. So I wouldn't count too much on it, but still, this is good way to work with. 72% is also great for me. Even if I do keep 72%, 72%, even if my goal is to make this cross this line at the end of the year, that is a 10% line, double-digit return. I can beat any fund manager. But I always, I mean, my average comes out to be 30 to 34% on a conservative simulations. And even if I can do this, I'm still very happy in my other portfolios with everybody at 30%, right? If I'm aggressive and keep doing, I mean, I'm aggressive in the sense I'm doing the same thing. It's just that the probability, I'm expecting that probability is gonna work more for me, more than 72%. That would be great. I'll do much better than 30%. That's all I care with this TSTO trades. And that's why I allocated more of the capital towards this kind of trades on my portfolio. And that is the math behind it, okay?
Hey, Tushar, sorry, can I ask a clarification question? I'm a little lost on line number 13. It says close losers at percentage credit received, and it's 80.
Yeah.
How does that work? Like if I received $1 premium on a $5 win, what should my close be?
Okay, so dollar divided by 5 is you got $20, right? I mean, right, say right. Well, let's just put say $100 divided by 500. So you got say that's the same thing. Sorry, me going crazy. So okay, so you got $20 credit, right? So right. when do I plan to close? I plan to close at 40% of that, right?
Yeah.
So say I plan to.
It's the losers.
To close at. No, I know. I'm just, let's just stay with me. So 8%, I'm not gonna do the trade, right? So I at least need, say, hey, instead of 8%.
Let's say we got $2.
$2, okay, fine. So 16, say you got 16% ROC right. on it, right? So I'll do that trade. So 16% ROC, no, $16. So at $16 divide by 500, sorry. So that, no, 5. So that's, I'm using the rudimentary.
No,
so that's 3.2.
Times dot 4. Times dot 4. You're missing a times.
I think that's what it is.
Yeah.
No, it's 3.2%. Why? No, that's not on a $2 Y 20. Let me go back. I'm doing something wrong here in the math. Here. Okay, so you got $2 credit. And right. I want to close at 0.4 here. Yes, 8. And that's divided by 5 is 16%, right? Okay.
Right.
So, okay. So, and then I want to close at, so that's, I want to close at, whenever I want to make $80 on it, right?
Right.
Okay, so $80, and if you so and the credit that you received is $2.
Mm-hmm.
I mean, 80 cents, so $200 and $80, right?
Right.
So if I start losing if I reach at 280, I create an alert. The vertical's price. So
Right.
that's 80. So that would be the 80% of the credit received, right? I mean, approximately. So whatever I was trying to make, if I'm losing that much, I want to close it.
Is 280 is 80%? Okay.
It's not 80%, but approximately. Let's just, don't take me wrong. Whatever I was trying to lose, if you look at the formula, if I'm losing double of that, meaning if I'm trying to make $1, and if I'm losing $1, I want to get out.
Got it. Okay, that's what it means. It wasn't clear. But that's what it means.
Yeah, but it's not the credit that I receive. If I receive a $2 credit, then I don't want to wait till $2, another $2, right? But I was trying to close it at $1. So if I'm losing $1, so it's like a bet one to make one. That's all I'm trying to do. Right. I changed that criteria from original thing. I know I was talking about different thing before. Reason being because I'm mostly right with expanding BBW, Bollinger Bandwidth study. So I said, well, I can be more conservative about it, because if the Bollinger Bandwidth changes on me, I'm wrong. Get out. I won't wait till 80%.
Yeah.
I mean, I will get out at half of that too. If I was trying to make a $1 and I'm losing 50 cents and I'm wrong on the study, I get out. I don't wait for it. I'll pick another winning trade. I don't have to wait for it.
Good money to know that you're right, Tushar.
Hey guys, we got to close it down here. This is getting pretty late.
All right.
I'm going to. Hopefully, you are at the end there, Tushar. If you have anything else, we can delay it till the next meeting. It was really, really good. I learned a bunch. Thank you very much. If anybody has anything else quick, let me know. Or if Tushar, you can return the screen to the general population here.
Yeah, that's what I'm trying to stop share. Yes. All right. Thank you.
Thank you
for listening to me.
Thank you very much.
Everybody stayed engaged. That's great.
Great. All right, guys. Anything else? I will call the meeting to a close. I do thank everyone for joining. We had 50 some members here through this most of this thing here. So I hope everybody has learned something, and I will see you in about a month.
Yeah, you take care. Thanks for hosting.
Thank you.